Hey guys, welcome back to the channel and welcome back to the daily macro update for today, Wednesday, February 21st. The biggest macro update for today is going to be reflation. Some of my market research has been leading to a change in the basic macro regime. The market seems to be transitioning from a Goldilocks regime, which is high growth, low inflation, to a reflation regime, which is high growth, high inflation, or higher inflation. According to investopedia.com, reflation is fiscal and monetary policy designed to expand output, stimulate spending, and curb effects of deflation, which usually occurs after a period of economic uncertainty or a recession. The term may also be used to describe the first phase of the economy recovery after a period of contraction. Key takeaways: reflation is a policy that is enacted after a period of economic slowdown or contraction, and the goal is to expand output, stimulate spending, and curb the effects of deflation. Policies include tax cuts, infrastructure spending, and increasing money supply and lowering the interest rates. This dovetails actually very well into China and them ramping up stimulus to boost the market confidence. In the latest report out on January 24th, the People's Bank of China is allowing smaller cash reserves to be held in banks. Essentially, what China is doing right now is cutting the reserve requirements by 50 basis points to let about 1 trillion yuan, or about $1.39 billion of long-term capital enter into the market. This makes sense as China is actually coming out of an economic contraction and they are looking to stimulate the economy very seriously. There were some smaller talks of them doing smaller stimulus packages, but it seems like they've been ramping up. From a technical perspective, we are currently looking at FXI, which is China's large cap stocks. We had a 13 buy signal generated on January 17th and since has been in what we call an uptrend. Basically, we've been hitting resistance at the $23 mark, and we are currently at a sell setup in a combo countdown of 4. RSI perspective, we're at a oversold condition, but we can continue to stay in this condition for some extended period of time. The trend for China is starting to develop, but we'll see in the long term of how this trend can kind of continue. So the transition from Goldilocks to reflation is a tough time for traders, investors. This is a time when the market is trying to find where it wants to place its bets. And if you are a little bit more patient, this would be a good time to view the market, look at how it's reacting, wait, and then place your bets and also trades. Moving over to QQQ, which is the top tech companies in the United States, we see that similar to yesterday, we hit a resistance at 436, and the trend is currently going down. We currently have a buy setup indicating that the direction is down and at 3. So we have about 6 more days potentially until a reversal at a 9 count. From an RSI perspective, we're trending down to the oversold category or transition, but we haven't hit that mark yet. So from my perspective, I think the market, specifically equities, large tech companies, will take a little bit of a breather here as the market's trying to assess this regime shift. An important area to look at is energy within the reflation regime change. We're looking at the XLE, which is the S&P 500 energy sector. From a technical perspective, we had a 9 reversal generated on the 9th of January, and it seems like we're currently in an uptrend. We currently have a 3 buy setup from combo, indicating that the trend is most likely to continue going up. From an RSI perspective, we're right in the middle of the range, so not overbought or oversold. This actually makes sense of that the market is actually switching over to a reflation regime. Energy, natural gas, oil will also rise in price. We also have some up targets for XLE at $87 and some downside targets of $83 and $82. Within the same lines of the reflation regime, we should be seeing and we are seeing an uptick in most of the business indicators for the US. As you can see, there's been an uptick in business inventories, ISM manufacturing prices, ISM non-manufacturing prices, as well as the United States ISM non-manufacturing PMI. For those not familiar with ISM, under 50 is considered a contracting economy, and over 50 is considered an expanding economy. As you can see, the direction right now seems to be trending north, and we should be hitting into expansion territory from a ISM perspective, which falls in line with the reflation regime. Moving over to Bitcoin and crypto, Bitcoin is down about $1,000 or 2%. Currently, we have, from a technical perspective, it seems to be potentially consolidating. We have some upside targets of $58,000 and some downside targets of $50,000 right now. If it breaks this $50,000 support level, it will most likely, seems like the trend is going to be going down. Another possibility is that Bitcoin is going to be consolidating from here. One thing to take a look at for Bitcoin specifically is the US spot Bitcoin ETF flows. Over the last couple of weeks, we've been noticing very heavy inflows into the ETFs within the $400 to $500 million range. The current trend is actually going down. Over the long weekend, we actually had the smallest inflows we've seen in a couple of weeks or so at around 100 million or so. Technically, this is still, and it's important to look at trends rather than some data points. If the trend is going down, potentially that could also correlate with a decrease in the price of Bitcoin. Next, moving over to ETH, Ethereum. Ethereum has been the next narrative on after the Bitcoin ETF. Most folks think that Ethereum has been underperforming Bitcoin, and that Bitcoin is actually and Ethereum is actually going to be catching up, or there's going to be a catch-up play for Ethereum. Right now, the main story and the main narrative for Ethereum is the Ethereum ETF, which is slated to have some news around April timeframe. From a technical perspective, Ethereum is right at $2,900. We don't have any major DeMark counts currently for Ethereum. We do have a C wave completion, which indicates that potentially Ethereum is going to consolidate or potentially go down here. We have some lower targets of $2,700. Below this, we'll be going down in a downtrend. We'll be starting a downtrend. We don't have any upper targets currently for Ethereum, which is not a good or a bad thing. And finally, taking a look at SOL or Solana. From a technical perspective, we had some 9 sells complete on February 15th. Solana's been currently in a downtrend and has a countdown of 6. Potentially, we have about 3 more days until a potential reversal from DeMark indicators. We have some current target upsides of $111 and $122. Don't have any major upsides above that, and below $94 should indicate a major reversal in a downtrend for Solana. Solana's enjoyed the narrative of the next chain and a cheaper, faster chain than Ethereum. One thing of interest has been from Decrypt.co. One narrative to look from Solana as a growing ecosystem is that the total value locked has actually increased to topped $2 billion, even though Solana has been underperforming, which is important. So total volume locked is a very important metric in DeFi, which is the exchange of Solana-based tokens on Solana. This is a good metric since a lot of users have a lot of faith in the DeFi system of Solana, and more folks are putting more and more money into work and locked into the Solana blockchain. So that's all the updates that I have for today. Thank you for watching, and I'll catch you guys next time.